What's up, everybody? Michael Silva here. Something doesn't quite seem right with today's price action. A lot of confusing faces out there. That's what we're going to talk about on today's stock market brief, which we're getting right into. Everything across the board was up. So what's the problem here? Well, nothing. Yesterday we talked about the bulls were back in town, or the day before, right? This weekend recap, we talked about it. And the bulls showed up. But something overall looks quite strange. And that's what we're going to get into. VIX right down here was relatively flat despite seeing a pretty strong day in the overall markets. Another thing to pay attention to was the dollar was up today on a big move in the S&P 500. Also to note that the 10-year yield was up pretty solidly, 1.18%. Positive divergence looks like it's to be playing out here. Are we going to see a more rapid rate of change to the upside, which could very well put pressure on our beloved tech stocks? TLT, you can see, is backed off a little bit. You can see here it had matching highs. Some might call this a double top. It's really not a double top until we crack from this low and then potentially start moving down from that point. We did have a negative divergence there, negative divergence here as we had those matching highs, and we're seeing it back off slightly right there. Another interesting thing was you would think that the Fed terminal rate, looking at today's price action, would head down, but it actually didn't. It moved up. So we're looking here at a Fed increase of 25 basis points still in February. That's pretty much priced in. And then we have March, another 25 basis point hike. And then we have this kind of solid pause here, which it looked like it was really only till here. And then we had 2 rate cuts. But as you can see, actually now it looks like we just have holding till November, 1 rate cut in December. So, the Fed meeting, when it comes up, that's going to be an important one to pay attention to. Another interesting divergence to be on the lookout for is the copper and the S&P 500. So I noticed this and I called it out a while ago and it's been playing out, so we might as well continue to watch it. But when we have a high in copper to a lower high, meanwhile, the S&P 500 has a high and a higher high, it's been playing out to the downside. So you can see that divergence showed, and we had a move down in the S&P 500. On the flip side of that, we called out, well, this low, and then we have a higher low on copper. So is copper telling us, is a leading indicator telling us where the S&P 500 may go? Well, it did right here. Boom, we saw that move. We saw that move upwards in the S&P 500. We also saw it right here, and we saw a nice strong move in the S&P 500 and a big strong move in copper too. What do we got going on now? We have a lower high and a higher high right here. So that's going to be one to watch out. This can be broken, but it is currently building as it stands. We also had smart money versus dumb money up here, so this is interesting. So sorry, this is supposed to be a D for dumb, and then smart money up here. You can see we have a high and we have a lower high where we have a high and a higher high in dumb money. And sometimes those divergences play out to the downside. Bonds can tell us ahead of time. What you want to see right here is a crack of this low, and that could potentially send us lower, which could very well take us lower in the SPY 2 as well. What do we got on the calendar? Well, we got some global PMI numbers coming out. So this is going to be hitting the tape 15 minutes after the opening bell. So that's going to be important to watch. Those are, a pretty severe impact to the markets. Macro data drops have been very important to watch out for when they hit the tape. So 15 minutes. So understand this, the market's most volatile within the first 30 minutes of trading. Now we're adding in the first 15 minutes of trading some macro data drops. So expect to see some volatility there. We also have, before the open, we have earnings on Verizon, Johnson & Johnson. I'm not going to read them all off, but we have some big names. I'm interested in D.R. Horton, mainly because I'm in the market to sell my home and also buy a home, so I'm really interested to see how they report. And then after the close, we got Microsoft, and then throughout the remainder of the week, we got some big earnings. S&P 500, right? This was the level we were watching to get back above that year-to-date anchored VWAP, get more bullish. Boom, bulls are back in town. We saw that pop. So overall, pretty nice, and we closed above this evening star pattern right here, which negates this as being valid, okay? And we're overall within just, let me draw this out here. Boom, we're just in the middle, back in the middle of this upward sloping channel, as you can see right here. Okay, now I want to note that we tagged just about the upper weekly expected move. And as you'll probably see on a lot of videos or people calling out this trend line, boom, we broke it, right? So hallelujah, one day above, maybe a couple other, pops above, but one solid move above as well as above the 200-day moving average. So we want to hold up in these areas would be nice. So as long as we're holding 4,000, that could be a positive sign. Like I said, where can we potentially go? That 4,200 would be the really big area of resistance to keep an eye on, as we've had prior areas of support, resistance. We had that supply drop right over here. And then we have just obviously right above us at 4,100. So if we can get above there, it's within reason to believe that we can get there. This week might be a little bit difficult, but we shall see. Why would it be difficult? Well, as I already stated, we did already reach the upper weekly expected move. Not far off, so it's possible that we come right back up into that range. We had a negative divergence earlier in the trading session, and it started selling off there, and then we got a little bit of a bid back above that daily anchored VWAP. What's good is going on here on the screen? Well, the bulls are still holding up on that 5-day moving average as it's starting to incline. It neutraled out, right? And then we're starting to still stay above it. So that's a positive sign as it stands, and we're still above that year-to-date anchored VWAP, which tells us what? It means the average buyer, based off of volume, is in the green this year, looking at the S&P 500. So that is overall a positive sign. Now, the Qs, interestingly enough, too, is in just a short-term up channel, right? And it's also above an inclining 5-day moving average. It came to the lower area, and this is how I kind of drew this out, right? It's touching multiple times here. Resistance, 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 resistance. We had a negative divergence. It played out small to the downside, and it also hit that upper weekly expected move. The PMO is starting to curl itself back over. So, if you're looking to short this, just be careful. But, if it starts getting above, it could pull right back in. We've seen great opportunities to scalp outside of the weekly range back into the weekly range, which is always a possibility. Remember, 68% of the time it closes within there. As we saw last week, it was pretty crazy. Now, I also want to call out the expected moves. This is something that I share with my Patreon group. I share 40 something products or something like that. These are the expected moves for the week going in. That what it was going into this week. And I just want to call out, showing the big dogs, right? Some big names. Apple got outside of its weekly expected move on day one and then closed back within it. So this is what I mean by if things get outside of it, it could create opportunities for short-term scalps or potentially in and out type spreads where you can play with very minimal risk, right? So you can be risk averse, I guess, and you could play it right back into the weekly range. So it is right there as it stands right now, right by that upper weekly expected move. Tesla also, it was a great day today for Tesla, up 7.74%. We talked about this being a holy grail setup, but more bearishly. And if it got above this black candle right there, that's where, it could be more bullish. And as soon as we crossed that level, we started popping up higher. It was a nice trend day to the upside coming into that upper weekly expected move. Still an overall bearish trend, but that was a positive sign there for Tesla. And then another big one was NVIDIA, was up 7.59% on the day. You can see that is actually currently trading outside of the weekly expected move. So that actually might present an opportunity to come right back within it here going into tomorrow. So we'll see here if it pops up a little bit higher. These are not type of trades where you want to go full bore, full YOLO, right? And then hope it comes back, because if you paid close attention with NVIDIA and you look at those weekly expected moves, this is closed 3 times now outside of the weekly expected move. So, that's pretty rare. So it's likely to see this pull back in at some point. What is that going to look like? I don't know, but it's, to me, I can see the case for potentially fading short-term moves. You just got to be a little bit more aggressive there with that. If you take a look at Microsoft, you can see it's nowhere near the upper weekly expected move. Be aware that obviously Microsoft is one that will be reporting earnings after the bell. So implied volatility swells up like a balloon. And you can see here that, hey, it can be around 230, by tomorrow or by the end of tomorrow. Or it can even be right up here at 250 by the end of tomorrow there too as well. Now, also to note, we have the BP NDX chart, still not an oversold for bot conditions, but it is pointing up there. Looks like it'll get there eventually. The BPCOMPQ, this is, the NASDAQ composite is in bot condition, and you can see there is a negative divergence forming right there, which could be bad. And understand that the NASDAQ composite is a huge portion of this is semiconductors. And like we just recently stated, semiconductors got a huge bid getting outside of their weekly expected move. I believe in SMH, which is a semiconductors ETF, but NVIDIA here that I'm pointing out. And then we have the NASDAQ summation index still pointing up, right? We talked about, hey, is the trend going to change when this ticks over? Well, sure enough, right? It ticked over right around here, and the market's been going up. So this thing is still working very well. We do have a subtle divergence that's forming there in the NASDAQ McClellan oscillator, higher highs in the price, lower as far as the NASDAQ McClellan oscillator reading go. If we take a look at the technology sector for the BP charts. It's also moving into overbought conditions, so be aware of that. NYA, which is more of a broader market, negative divergence there in overbought conditions. And then also, I haven't shown this one for a minute. Last time we showed it was down here. This is the, growth versus value. And we're looking, now I hid the line, but what we're showing here is the Qs, because when we get into certain areas, it could present itself as an opportunity to, short the Qs or go long the Qs, and so forth. And the last time we talked about it was this low to higher low in the rate of change, and then a low to a higher low in the RSI. Now, it doesn't show, like I said, the relative strength line, but that was a positive divergence. And that is what we called out going into 2023, and we're seeing a move higher in the Qs. And the reason why I'm bringing it back up now is because we are moving into rate of change territory and potentially an RSI territory that is considered overbought. So this move could be coming to an end at some point here soon. By end, it doesn't mean crash. It means a potential area of consolidation. Okay, but it is something to be aware of. The last thing I'll close out here is the zones. This is something I send out to the Patreon group if you're interested in that. I haven't listed it here yet. I will eventually. But over here, you can see that we're getting some more red on the screen. So S&P 500, it's more towards the upper end of that range there. The Qs is up towards the upper range, end of its range there too as well, or upper end of the zone, 292.94, and it closed at 288.96. So as it's reaching the higher end of these zones, it's also reaching the higher end of the weekly expected moves there too. Communication services, or XLC, right? It's getting up there. Semiconductors, it's getting in the red, and so forth down the list. So that's what we want to pay attention to. Silver, I actually took a trade in silver early today because it got hit so early on, right to its lower weekly, not lower weekly expected move, lower zone level. And I took a shot there, just intraday trade, and got a nice little bounce from that. Could have been because we saw a little pop in the dollar, saw some weakness in silver. Could be a bunch of various different reasons, but I'm already out of the trade. It was just a quick intraday trade, so nothing crazy there. But that's all I got for you. Oh, hope that helps out. Once again, the reason why it looks a little strange today is because there are a lot of indicators saying that, hey, we saw a good strong move, but a lot of red flags as we're going into earnings, and we have a lot of data. So just be careful out there. If you are long right now, you can always consider updating your stops, right? You can have a stop. If you played this up through the year-to-date anchored VWAP, you're doing good. You can always just make sure you have a stop at break even, or put a stop at the prior low on the daily candle. Those are all possibilities, or maybe you're swinging it longer, right? It all depends on your time frame. But that's all I got for you on today's episode, everybody. Hope it helped out. See y'all later.